Hey everyone, it's Rob Folia, real estate broker here in Nashville, Tennessee, as well as author of Real Estate Reset. And I wanted to jump in here and come to you live, well, I guess live to tape, and talk a little bit about the real estate market, what we're seeing here now that we are a week into April. How's the market looking here in Middle Tennessee? It's spring. What are we seeing? So let's just dive right in, take a look and see what's going on. First and foremost, I wanted to talk a little bit about interest rates. As always, I'm looking at the Freddie Mac website, just trying to get this straight from the source. Once a week they update. They update every Thursday. So, and sometimes this is outdated by a couple of days, but very generally speaking, it's going to show us what's happening in the world of interest rates and mortgages. And you can see here, this number is the one I'm mostly focused on, 30-year fixed. Most people get a 30-year fixed. Yeah, you get some that have 15. Most people get a 30-year. You can see they've basically stabilized here in the upper mid sixes. Depending on who you talk to, what mortgage lender you talk to, you might get a rate a little bit higher than that. But the reality is you're in the mid to high sixes. Um, did I say low to mid a minute ago? I meant mid to high sixes here, and that's what I think you can expect when it comes to rates right now. Unless something drastic changes in the economy, and I know there's been some changes this year, obviously, and I'm not getting into anything political here, but with tariffs, things like that are going to impact the economy. I don't know if that's going to impact the real estate economy. We haven't seen it yet. I mean, yes, it very well could. I know things are going to, could cost more, et cetera. Again, I don't want to get into politics on any of my videos. And yet the reality is, if we're seeing rates kind of in this mid to upper sixes, I mean, that's what we've seen over the last few years. I mean, just going back even 3 years, really since this rise in 2022, when, rates had been, and, I can go back a little bit further than that, you can see when rates were super low. And then, in 2022, when they started to go up, I mean, in 22 they hit 7%. And so I mean we've basically gotten accustomed to, over the last 3 years, seeing interest rates in this mid sixes range, 7% range, sometimes a little higher. You can see some, we did hit a period last year where we were closer to six, so sometimes a little bit lower. But the reality is, I mean, it's pretty normal, and so that's a good thing. It's stabilization of interest rates is a great thing for the real estate market. Now, it doesn't help affordability, and that's 100% true, and there's nothing that's going to impact that. It doesn't help affordability, but it does help provide stability. So for all the homeowners out there, you're not trying to guess what your home is worth because rates have all of a sudden gone up 2%, and how's the buying market gonna react to that. You're not having to deal with that because you're seeing what interest rates look like today, and what they've been looking like for the last little bit. You can see they are down a little bit, obviously, too, from the very beginning of the year. Good thing, obviously, lower rates help. I honestly hope they stay somewhere in this mid sixes, maybe drop a hair, but we don't want them to drop too much because that's going to create a very, I guess, gosh, what's the right word here? It'll create a real estate economy that could be very volatile if they drop low. I just put it that way, just to put it that way. And the reason why I'm saying that is I'm seeing a couple of trends that I found pretty interesting here. And so I've got Davidson County pulled up, and I just want to look at a few things here. And so just to transition away from rates, and I guess one last thing about rates before we look at those things is that the numbers that we're seeing are basically, they're also a little bit, just like we were talking about how rates are a little delayed because it's not the rate of today. I'm not a mortgage lender. I can't quote you today's rate, but it's their recent numbers. These numbers are almost further out because you can see these are numbers from March of 25, ending March of 25. As I'm recording this, it's April 14th. And so this is, 2 weeks after that. And, the March of 25 numbers, because real estate's a lagging economy, meaning it's an economy where, agree to purchase a home in February and you close in March, and then it gets reported here in April. It might be slightly delayed, but it's still these numbers having an impact on what we're seeing. The interest rate numbers having an impact on what we're seeing here. So first things first, months of supply. We have talked almost ad nauseum about months of supply over the years on these update videos. So I don't want to go too in depth on it. But one thing I'm seeing that's interesting is you can see months of supply, a little more than four, almost 4.2 months of supply. While it's down compared to last month, which is great, the reality is March of 24, let me find it here. March of 24, we were at about 3.4 months. almost 4.2 right here. I mean, that's a pretty good increase, guys. I mean, the reality is that's about a 20 or 30% increase year over year of March of 25 over March of 24. Again, not a bad thing because 6 months is kind of that balance line. Being lower than six is still a seller's market. It's still a strong economy. Um, Yet seeing this, it does scream to me, hey, we are creeping closer and closer to that balanced market that we haven't seen in quite a while. And so just beware of that and just be thinking about that. Another thing, and just to jump back here, let's go to let's just look at some percentages. So right here, what we're looking at here is oh no, I don't want to look at trends. My apologies. Ratios. Let's look at ratio. So this is average sales price to average list price. And the reason I want to look at this more than the other is this shows, you know, truly what is happening in Davidson County as a whole, not just for one pricing bracket or the middle of the economy. This shows everything. And this is the average sales price to list price. You can see, I mean, it looks bad because this insane, peak that we saw in 22 when rates were way too low and why, again, we don't need to get into that. But you can see, I mean, we're at 97.76, 97.8 in terms of, the average home, if it's listed for, just to take easy math, listed for $100 is selling for $97.76. Um, the average home buyer is getting about 2.3% off of the average price. Powerful to know as a home buyer because that should tell you that you have a little bit of leverage. But as a home seller too, know that it definitely could be lower than that, and that's a not a bad thing. I will say too that this isn't average. And in fact, let's just show you all median. Let's get rid of average so there's not too much on the screen. Median, it's above 99%. Um, the reason I'm pointing this out instead of the average is that sometimes averages can get skewed. There could be, a situation where multiple homeowners have to sell, or maybe they overpriced, and so they are selling their home for 5 or 10% less than their asking price because they overpriced, and it does skew the average a little bit as opposed to median where it's getting closer to the middle. Regardless, what I'm trying to get at is you can see here at the median, it's 99%. Granted, that's lower than last year because you can see right here, March of 24, 99.4, 99.5% here, 99.1 down 0.3% basically year over year. Not a terrible thing. Obviously, it's a decrease. It's going in line with what we're talking about with seeing months of supply rise. But the biggest thing that I really wanted to point out here is inventory. Inventory to me is showing a pretty drastic increase, and this is probably the nerd in me is definitely nerding out over some of these numbers because when I see this, and at first, because the way RealTracs reports it, you might see on the screen we're at almost 3,300 homes for sale in Davidson County. Total inventory says up 5.54%. Um, the reality is that because of the way they report this number, you might think that's up 5.5% compared to last year, but it's not. That's compared to last month. 5.5% last year is way off because you can see we're at 30, call it 3,300 just through easy math, and March of 24 we were at 2,900. Again, easy math, 10% of an increase of 10% of 2,900 would be adding 300 to it, so it'd be 3,200, right? We're at almost 3,300. So it's more than a 10% increase from March of 24 to March of 25 in terms of total homes for sale. Again, that's not a terrible thing because we're still in that seller's market range. But what that's telling me is more homes are going to sit. There's more competition if you're selling a home. And it's just something to be aware of. In fact, if we look at active inventory here, just to really kind of drive the point home, because active, those are the homes that are out there actually for sale, not under contract yet. They haven't sold. If you're selling your home, like that's the other active home that's out there. That's truly your competition. Not that home that's pending and is on its way to closing because that's gone. That's a buyer can't buy that anymore, right? But this right here, you can see 2,265 homes March of 25. Compare it to March of 24, where we were at 1,786. Gosh, I mean that's tough to do that mental math right there, but that's about 500 homes more than what we saw last year in total in terms of total active. Um, that's a big increase. I mean, that's again, that's I don't want to say the wrong number here, but I mean, based on that difference, that's about a 20% increase in terms of active inventory from this year compared to last year. That's huge. If if trends continue to show what we're seeing right here as we progress throughout the year, right? If trends continue to show what we're seeing, and we continue to see this market inventory rising the way that it did from last year to this year, I mean that's the clear sign that tells me that we might be heading into a buyer's market next year. Again, nobody knows, and I'm the last person that wants to speculate when it comes to this stuff because nobody knows. Obviously, I don't think anybody was talking about tariffs, 6 months ago, and so nobody knew how that was even on the radar to impact our economy. So we'll see how this impacts our economy. But the reality is, our economy is in not the best shape right now, and in real estate, it might start seeing it soon. Long story short, and if this is your too long didn't read or too long didn't watch moment for the video, then maybe I can make this a short here on YouTube. But if this is your TLDR moment for the video, what I'd say is if you're a homeowner and you want to move and you can move and it makes sense to move, do it now. Do it now. Don't wait for, that perfect opportunity for the market to go a certain way. Do it now because we see what it looks like. You're still in an advantageous position as a seller, as a buyer. Rates have normalized. You know what to expect. You're going to be in a good shape. You have a little bit of leverage as a home buyer too right now. So if you're needing to sell and buy, we can make all that happen and have y'all be in a good spot. So, long story short, if you have a question, reach out to me. I'm happy to help. You can reach out directly, 615-238-7578. You can also hit reply if you're getting this in your email or leave a comment. Also, please drop a like because it helps this channel grow. Thank y'all so much, as always, for watching, and we'll talk soon. See y'all.